Thank you for continuing to check out the Finland Roll-Up and Associates Municipal Market Update. We did take a week off due to the 4th of July holiday, but the market's been relatively calm, so I don't think we missed much by taking time off. We have prepared this for the week of July 20th. We look forward to getting the numbers with you. On page 2, what we detailed here is the historical municipal market data curve, and what we've shown is for years maturities 1 through 30. And the 1-year maturity has a yield of 0.15, and a 30-year maturity has a yield of 1.47. I've talked to you a lot about how flat the yield curve is, and that definitely continues now. When you look at the 1-year, I've talked to you about that being at anywhere from 0.11 to 0.22 over the last month. So we're kind of right in the middle of that. But then go to the 30-year. I've shown you that the last few times in the 1.6, 1.66 range, and now we're down to 1.47. So when I've talked about the yield curve being flat, it's even a little bit flatter than it has been over the last month or so. And so that means investors are saying we are willing to go long without taking that much more yield for it. Oftentimes, that's a sign that investors feel rates are not going up anytime soon, because if rates were to go up soon, their bonds that they have in a portfolio would go down in value. And so if they're able to loan 30-year money at 1.47, one, they feel very comfortable with municipal credits, and two, they probably feel that interest rates are not going up in the near future. On the next slide, slide 3, we're showing here is the AAA MMD, and we've really isolated 3 maturities over a period of time. We go back to July 17th, 2019, and we show the 5-year, 10-year, and 30-year maturities. And generally, they've tracked together. You certainly see some differences there in September-ish of 2019. You definitely see when the country basically shut down in early March, those spikes there in all 3 of the maturities. But hopefully what you're now seeing is a real calmness going back to May, where it just generally stayed pretty consistent. But all 3 lines have started to drift downward just slightly in the last few weeks. And hopefully you see that towards the tail end of that chart. So rates continue to be stable, but also drift a little bit lower. And what we show here is the 10-year Treasury versus the 10-year MMD. If you look at that 10-year Treasury, it is starting to drift closer to that Treasury. So investors are most likely saying we are more interested in municipal bonds than we have in the past, because the 10-year Treasury is staying consistent. But now when you're seeing that MMD of that same year starting to drift towards it, investors are more accepting of a municipal credit that's a AAA than they were in previous weeks. So that's a good sign from the municipal market that investors are moving in that direction. You know, why is some of this taking place? And this is a chart that I spent a lot of time on with you, and it really shows the inflows into the municipal bond funds. And that red spike, or I'm not sure if you call it spike when it's negative, but that dramatic red line there, that showed money flowing out of municipal bonds. And that's when we saw rates go up substantially. And since then, for most weeks, we have seen money flow in. And the breakout chart right there in the middle definitely shows that real consistent inflow into municipal bond funds. And that might be what's putting some of that pressure on municipal interest rates, because you have so many investors still interested in municipal bonds. But that's a good thing, because supply is up. And if you don't have the demand, you have a lot of supply, then you'd likely see an increase in rates. But we have a significant amount of supply coming, and that's what this next chart shows. I think if you just try to break it down into some big picture items here, that red dotted line shows the average supply in 2018, so quite a bit lower. That brown line in the middle there, that's 2019, and our green line, that's 2020. So good thing we have a lot of money still flowing into the municipal bond funds, because we certainly have more supply than we've had in the last few years. So hopefully this continues to absorb the level of interest we have in municipal bonds. Slide 7 is the economic calendar of things to come. And I would just characterize this as a list of hot topics. You have housing in there, you have oil in there, you have durable goods in there. So how these things shake out should have an impact on the market. We should watch all these. If they come in as unexpected, we'll likely see things change one way or the other, depending on whether it's a positive or negative. Once again, our last slide here, we have the Film and Rollout Registered Municipal Advisors. Encourage you to reach out to any one of them for additional information. And I look forward to talking with you again on August 3rd.